Are you ready to take the investment challenge and find out which stock has the potential to soar? Air Canada and Air Transat were once in talks for a merger, but things didn't pan out. Now the question is, which of these two stocks has the chance to fly high again? Holy banana bread, let's do this! Are you ready to join the flight of discovery and find out which airline company has the wings to lift off into profits again? The pandemic took the world by storm, and the airline industry was hit, well, they were hit pretty darn hard. Air Canada and Air Transat were no exception and went through some very turbulent times as they tried to navigate a world shut down by the virus. But even after the clouds of the pandemic cleared, they still face challenges like inflation, labor shortages, and some customer service nightmares. So, which of these two companies has the better chance to take off and soar once again? Before we put our trays in the upright position, let me know in the comments your favorite airline in Canada. Thank you for dropping in on the home of free financial content on YouTube. While you are here, please like and subscribe as you don't want to miss a single moment, and a huge thank you for that click. Air Canada is the flag carrier and largest airline of Canada, founded all the way back in 1936. The company has a rich history that spans over 80 years. Air Canada initially operated as a government-owned corporation until it was privatized back in 1988. Over the years, the company has expanded its fleet, routes, and destinations, and has grown to become one of the largest airlines in the world. Air Canada has faced its fair share of challenges, including the 9/11 terrorist attacks and, well, of course, recently, COVID-19 pandemic. But despite all that, they have managed to adapt and continue to provide air travel service to people around the globe. Today, Air Canada operates flights to more than 200 destinations worldwide and is known for its quality service and in-flight comfort. Air Transat is a Canadian leisure airline that was founded in 1987. Initially, the company focused on charter flights to destinations in the Caribbean, Mexico, and Florida. Over time, Air Transat has grown to become one of the leading leisure airlines in Canada, and now offers flights to a wide range of destinations throughout the Americas, Europe, and of course the Mediterranean. The company has also diversified its offerings to include vacation packages and travel insurance. Air Transat has faced challenges throughout its history, including increased competition and, of course, that recent COVID-19 pandemic. But despite all of that, they have managed to adapt and continue to provide affordable leisure travel options to Canadians. The company is known for its commitment to sustainable tourism and has been recognized for its efforts to reduce its environmental footprint. This battle is gonna be a three-rounder as we compare surface data in round 1, growth in round 2, then close out the battle with a round 3 debt showdown. Without any further ado, let's jump into round 1 and get into that surface data. We will start with Air Canada as their market cap comes in at $7.95 billion and they have a fairly volatile beta of 2.33. Their earnings per share is, well, it's negative 9.17, and their price to earnings ratio also comes in at a negative 3.40. You can already tell we're going to be dealing with which company is, well, faltering the most. Currently, their revenue comes in at $16.37 billion per year, with actual earnings of negative $1.89 billion per year. If there is a silver lining to that negative number, it's that those earnings are forecast to grow by an impressive 76.46% per year. And of course, that leaves us with their free cash flow, which comes in at $438.5 million. In regard to fair value, Air Canada is currently priced at 56.8% below their discounted cash flow model. Switching over to Air Transat, their market cap comes in at $126.96 million, and they have a slightly volatile beta of 1.59. Their earnings per share, also negative, comes in at negative 12.50, and their price to earnings ratio comes in at negative 0.30. Currently, their revenue comes in at $1.64 billion per year, with actual earnings of negative $445.32 million per year. Those earnings are forecast to grow by a very impressive 99.62% per year. And their free cash flow comes in at, well, it's negative as well, negative $210.38 million. In regard to fair value, Air Transat is currently priced at 98.1% below their discounted cash flow model. That first round was kind of interesting. Air Canada has an overall better cash situation, but yet Air Transit may just have more room to grow if those discounted cash flow models have anything to say about it. Nonetheless, it does boil down to the cash, and for that reason, Air Canada squeaks out and wins round one. In round two, we are going to look solely at their growth, as neither company has dividends. When we look at Air Canada's growth, their 3-year growth comes in with a return on investment of negative 51.72%. Their growth in 2022 saw an ROI of negative 8.66%, and thus far in 2023, we have an ROI of 12.47%. That is looking pretty darn good. Hopefully they can keep moving to the positive. Back over to Air Transat and we'll take a look at their growth. Their 3-year growth comes in with a return on investment of negative 79.45%. Their growth in 2022 saw an ROI of negative 25%. And thus far in 2023, we have an ROI of 11.33%. Those 2023 numbers are also looking pretty good. Round two is also going to Air Canada, as they fell a lot, but Air Transat fell that and a good amount more. Air Transat did make it close on their 2023 recovery values, but just fell a wee bit short there too. Round two is also, as a result, going to Air Canada. This takes us into the final round, and Air Transat has their work cut out for them. They need to absolutely dominate Air Canada over the debt round if they want any chance of winning this battle. When it comes to Air Canada, they have a total debt of $13.88 billion compared to total equities of negative $1.93 billion, making their debt to equity ratio negative 718.7%. Now, part of that is that they do hold $8.49 billion in cash and equivalents. Short term, their short-term assets come in at $10.20 billion, and their liabilities come in at $9.01 billion. Long term, their assets come in at $19.56 billion compared to $22.68 billion in liabilities. Air Canada does not have the earnings or free cash flow to cover their debt or its interest. The silver lining to their bad debt situation is that they do have enough cash to keep going for more than 3 years. This gives them time to get into a better cash flow and debt situation. Over to Air Transat, and they have a total debt of $688.52 million compared to total equities of negative $750.18 million, making their debt to equity ratio negative 91.8%. They also have $322.54 million in cash and equivalents. Nonetheless, this is not a great debt situation. Short term, their assets come in at $1.03 billion and their liabilities come in at $1.5 billion. Long term, their assets come in at $1.24 billion compared to $1.97 billion in liabilities. Their debt and interest on that debt are not well covered by operating cash flow because it is, well, negative. They also have sufficient cash to run this deficit for more than a year, so they have less time to right the ship compared to Air Canada. So, round 3 is going to Air Canada for the clean sweep. The deciding factor is that Air Canada has more time to fix their situation than Air Transat. So who is the winner of this battle? Obviously, with a sweep, we have Air Canada taking the crown for today's battle. I am liking the direction both companies are moving in, and with Air Canada, it is not a bad company to jump in on while its shares are still low. They both have potential for a lot of growth, but overall, I have more confidence in Air Canada getting there first. It does not have to end here. Check out my video on those 10 stocks on fire in my portfolio that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.